So a couple of very important points regarding this video. First and foremost, I had shot this video last week and I'm releasing it today. So the price of the stock itself has changed quite aggressively. It has gone up by 25%. Should you be buying this stock still? Please watch the video to figure out. Second, a very quick shout out to our sponsors for today, which is Cuckoo FM. I absolutely love their product, and many a times you ask me that how do I end up identifying these type of stocks? So learn and improve your investing strategies, learn more about investing, listen to the summary of the book, Coffee Can Investing. You will learn a lot. I'm putting the links in the description box.
Hi everyone, welcome to today's video. So let me start today's video by sharing a small anecdote. If you would have invested 150 rupees in Pidilite 10 years ago, that would have roughly become 2500. So within a span of 10 years, Pidilite grew by 16 times, roughly 16 times, which is an amazing growth. Now you'll say, Akshat, you know what? I keep on hearing such stories. What's the big deal about it? Now that ship has already sailed. Pidilite has already become really big. Now tell me some company which can become the next Pidilite. So that is the precise discussion that we are going to have today. There is one stock that I'm very bullish about. I'm learning more about it and I'm crowdsourcing it to you. I will solicit more information from our entire community. So keep coming back to this video and keep checking the comments so that we get more information about this company. Based on the data that I've learned so far, I feel that this is a good company and I will explain you the rational analysis around it. So let's get the video started. But very important disclaimers. Number one, this is not an investment advice. Please don't go and buy the stock tomorrow. Please add it to your watch list. We will solicit and get more information about this company and then we will start taking some positions. Number two, this is a micro cap company. It means that this is a very small company. It has great potential, but along the way, the ride will be bumpy. This is super risky stock. So A, please don't go sell your house and invest all your money in this stock. Please don't do that. I say it so many times and people still, whenever I make a video, next day you will go and purchase that particular stock in bulk. Please don't do that. That is not called as building your position. You must do it sensibly, especially on micro cap and small cap companies. Do it sensibly. My stand on the stock is that after doing little bit more due diligence and seeking information from all of you, if you have more information about this company, do share it with me because there is not much info available about this company. So without further ado, which company am I speaking about? I am speaking about Jyoti Resins and Adhesives. It's a micro cap company. Let me very quickly take you through what it does. So Jyoti Resins runs a brand called as Euro 7000, which was launched in 2006. And it is the second largest selling wood adhesive brand in India in the retail segment. Now, what type of products does it have? Its primary product, Euro 7000, is very similar to Fevicol. So that's the brand it is technically competing against. So you'll say, you've probably gone crazy. Why are you bullish about this company? I'll explain it to you. Please hear me out. But let's look at other products also. It sells bunch of adhesives and wood application based products. And this is a list of products that you can consider. So it's not just one product company. So why am I bullish about this company? So let me very quickly run you through some fundamentals of the company. So the market cap is very small. There is no doubt about that. It's a zero debt company. This company used to have debt, but they have paid it, which is a great sign. Now, if you take a look at the profits of the company, it has been consistently going up. There is absolutely no problem there. Profits have been going up. Up until 2017, it was not seeing a lot of profits. Now it has started to see a little bit of profits. So essentially, there is not much interest from big investors in this company as of now. Now, why am I saying that these financials make a lot of sense? If you actually check their cash flow statement, you will see from the investment activity that they are focusing a lot in terms of increasing their capacity. So you will see that they have recently increased their capacity also, which is a good sign, especially given the fact that the sales are increasing. Sales are going up literally almost every single year, which is a great sign. In order to support those sales, they are increasing their manufacturing capabilities and due to which they are expanding their fixed capacity. Now this capacity expansion point or general expansion point about micro caps companies is very, very important. Why is that? Simply because of the fact that if a company is expanding quickly, then it shows that the founders are very hungry in terms of accelerating growth. They are driven. And further, if this is supported by organic growth means the company is net profit making. Whatever profit it makes, it reinvests in business. So it shows founders are driven, ambitious, passionate. Number two, they know how to run the business because they are able to generate profit and are constantly reinvesting it. If you map out the entire journey of the company, you will see that in 2007, the company expanded its capacity to 250 TPM. In 2012, it undertook geographical expansion. It moved to new areas like Maharashtra and other key markets. In 2021, it increased its capacity to 1500 TPM, so almost 6 times. In 2018, again geographical expansion. So what are they simply doing? They are expanding their capacity, moving to different markets. So this shows ambition. Also, looking at the financials, this is not unsustainable growth. They are reinvesting the profits and are organically growing the company. Now, there are 2 more points that I will tell you about this company, which I found to be very interesting. One is, please take a look at this shareholding pattern, and it shows the shareholding pattern of promoters. Now, from December 2019 to 2020 to 2021, promoters have bought more holding in this company, which is a good sign that promoters are not cutting the holding but are rather increasing the holding. It indicates that they are in it for the long haul. Now you might ask me that, okay, why did they cut the holding in the first place? Because the company used to have debt issues. From 2018 onwards, the company has brought down its debt significantly, and that has been a good sign for the overall business. Now the last point is regarding the industry growth itself. The adhesive industry itself is growing at a good pace. For example, if you take a look at this estimated figure, the CAGR is supposed to be around 8.1% between 2021 and 2026. Now this brings us to a very interesting concept in marketing and economics, which is called as price segmentation. So price segmentation simply says that when an industry becomes very big and lucrative and a lot of players enter into it, the customers are segregated as per the pricing or the brand value perception. For example, Apple laptops, right? These are super elite, so to say. They cost a lot of money and it portrays a certain quality. Now there will be some Chinese brand, the same laptop specifications you can get at probably 1/3 the price. So as the electronic markets grew, there was a lot of segmentation that happened in that market. Now Fevicol or Pidilite has approximately 70% market share of the adhesive market, which is amazing. But rest 30% is still up for grabs. So let me show you this picture, and I have taken this from one of the retail websites, and it shows the pricing of the product of Fevicol with Euro 7000. So if you check this 20 kg Euro bucket, it costs 3612 per unit. And Fevicol approximately same bucket of 20 kg cost approximately 4800 rupees. So there is a good 25% difference in pricing. So coming to the question that why is it that this company might be able to compete with something like Pidilite going forward? The answer is very simple, that they might go and cater to separate type of audiences altogether. So this brings me to the moat of the company. So here is a very interesting snippet that I've picked from Fevicol's website, and this talks about the history of Fevicol, how it grew, etc. And here what you will see is, if you read this last line, with its signature white and blue packaging, Fevicol was marketed directly to consumers, primarily carpenters. This is a very important point, so let me break it down. Essentially what happens is that if you are getting furniture made in your home, especially in tier 2, tier 3 cities, what is going to happen is that you as an owner, you will say it to your badai or carpenter that, hey, I need a bed, just go and make it. Buy the wood from the market, buy adhesives, buy this, buy that, whatever you need, just give me the bill and I will pay you. This is usually how it works in tier 2, tier 3 cities. This has happened in front of my eyes also, so I know for a fact. So Fevicol very smartly, in order to build its business, they contacted the carpenters. Because why? Because if I'm getting bed made from a carpenter, I will give that contract to carpenter and he gets to make a call whether he needs to buy Fevicol or whether he needs to buy some other thing. So if he's getting more commissions from Fevicol, then of course he's going to buy Fevicol. So this carpenter referral program is a very important aspect. So based on the readings that I've done, Jyoti Resin is doing excellent work with the carpenter community. So just to give you some examples, one is that you can check this paragraph from the company report. The company has an efficient carpenter reward model system, which is a royalty program. They tie up with carpenters. They also train them. If you take a look at this particular snippet, it categorically says, today it serves 12 states in India through 20 branches, catering to 10,000 retailers and 3 lakh carpenters across India. This is not a small network given the company's size currently. So it looks to me that the company is doing an excellent job in terms of maintaining relationships with carpenters. Now the second key moat of the company, in my opinion, is that there is significant room for operating profit margins to grow. So I will outline this point by giving you some numbers. So if you check on Pidilite, you will see that the operating profit margin right now sits at roughly 22-23%, right? If you go to Jyoti Resins, right now the numbers are hovering around 11-12% at max. So OPM can technically 2x with time. How will the operating profit margin for a company like Jyoti Resins will grow? So there are 2 ways. One is they might increase their product prices in the future. How will they do it? Because right now there is a 25% gap between Pidilite prices and Jyoti Resins, which is Euro 7000 prices. So they can at least bring it up by 5-7% that make the OPM better. Second way, they can do economies of scale. So as the company expands, as it creates more factories, manufacturing units, increase their carpenter network, build their distribution network, then automatically this OPM from the cost side will also come down. Now, the final thing that I've liked about this company is that it has been able to weather the storm that is currently going. So every industrial good company or FMCG company or manufacturing related businesses, including Pidilite, have taken a lot of hit due to high inflation. And this company has been able to weather this storm. So this is a great sign for a micro cap company, so to say, to survive in such a difficult environment. Is this story completely over? The answer is no, because this difficult time might continue, and this is the reason why I love the fact that this company is debt free. If the debt is zero, it gives me an indication that this company might be able to survive because of the fact that it can make a lot of moves even in a high inflation environment. So this is a good sign. If the company is able to weather this storm of high inflationary environment in India, then there is a very good chance that this company's stock prices are going to go up quite significantly. So let me break down the pros and cons of this company in a systematic manner so that we can make a final call on this. Number one, pro is that I definitely see this company in terms of taking market share even from a company like Pidilite, because the pricing difference is huge. And if they are super innovative with their approach in terms of how they are expanding, how they are managing their cash flows, there is a very good chance that this company might become really good going forward. There is also a chance that if Jyoti Resins is able to grow its business, it might even get acquired by a company like Pidilite. So even in that case, you might get a healthy exit as a stockholder. Now, what are the cons that I see in this particular company? So there are two major cons. One is the high inflation environment that I was speaking about. This is a con call snippet from Pidilite where they themselves are saying that going forward, we expect near-term demand conditions to be a little more challenged given the disruptions as a result of pandemic as well as input inflation to continue. So this is going to impact smaller companies like Jyoti Resins much more aggressively compared to something like Pidilite. And since both the companies are in the same domain, there is a good chance that there will be a lot of volatility regarding the stock prices of Jyoti Resins. Second key point is that Jyoti Resins stock prices have already given a lot of run up. For example, if you take a look that post 2020, the run up has been super impressive. In roughly 2 years time, it has gone from roughly 100 rupees to 1200 rupees, which is very, very huge. And it has still not come down. So what is my final verdict? Will I take some positions right away? The answer is no, I will not, because I do not have enough information about the company yet. It looks like a great prospect. I would solicit more information from all of you. If you know more about this company, if you know more about the founders, please comment below. I would love to read more suggestions and make an updated video on this. That's point one. Number two, I'm adding it to my watch list. I will keep on monitoring how the stock price is performing. But my assessment is that the stock price is likely to come down at some stage in the next 6 months. And that is when I might take some bulk positions in this stock. Hopefully you enjoyed the video. Please give it a thumbs up and I will see you tomorrow.